Zillow and Redfin could be quietly losing the data war. Seriously, for years, these tech giants have dominated, leveraging broker-provided listings to build their empires. But in 2026, a fundamental shift is underway, one that analysts like Nick Jurley and even Redfin CEO Glenn Kelman are watching closely. Brokerages, tired of feeding the beast, are fighting back, reclaiming their listing data and effectively cutting off the oxygen supply to the aggregators. This isn't just about commissions anymore. It's about control of the entire property search experience. So, what happens when the very source of their power gets pulled? The implications for buyers, sellers, and the future of online real estate are massive. All right, let's talk about something big. For years now, the real estate industry has felt like it's slowly bleeding out to a handful of tech giants. You're talking Zillow, Redfin, Realtor.com. These are the names that control the data, the leads, and increasingly, the narrative. But what if I told you that in the quiet corners of the industry, a rebellion is brewing? Back in 2025, when everyone was focused on mortgage rates finally dropping below 6%, as Bankrate's Ted Rossman predicted, something else was happening. The average home in Battle Creek, Michigan, for instance, was selling in just 28 days by November 2025, blowing past the national median of 77. This rapid velocity, even in smaller markets, was fueling a sense of urgency for local brokerages. They saw the transaction volume, but they were still sending their best data to the aggregators, essentially feeding the competition. As James Harris, a veteran with 25 years in the game, put it, 2025 wasn't a crash. It was a reset. And 2026, he says, it's going to reward discipline over luck. That discipline is manifesting in a quiet but ferocious battle for property data. Brokerages, seeing their market share and even their identity erode, are using providers like Atom to reclaim control. They're building out proprietary data tools, offering exclusive insights directly to their clients, and effectively walling off their valuable listing information from the very platforms that made them famous. This isn't just about leads. It's about the fundamental structure of how we buy and sell homes. The implications for buyers, sellers, and agents are monumental. We're talking about a potential seismic shift in where you find your next home, who profits from that search, and how transparent the market really is. This fight for data isn't just happening. It's escalating right now, and the outcome will fundamentally reshape the entire real estate landscape. Back in 2025, when the collective anxiety peaked and headlines screamed about an impending market collapse, it turns out that wasn't a crash at all. As James Harris, a seasoned real estate veteran with 25 years navigating market cycles and a managing partner at the national brokerage The Agency, eloquently put it in his widely circulated 2026 Real Estate Market Predictions report, 2025 was a crucial reset. Now, as we've moved into 2026, he forecasts that it's going to reward discipline over luck, a strategic shift from the speculative frenzy of prior years. This sentiment isn't just an isolated opinion. It's echoed across the industry's most influential voices. Amanda Lauren, contributing to Forbes on December 22, 2025, underscored that after a significant turning point in 2025, where the hyper-accelerated post-pandemic market momentum finally decelerated from its 15 to 20% annual appreciation rates, experts are anticipating stabilization for 2026, not a dramatic downturn. We're already observing this stabilization play out in diverse regional markets. For instance, Mike Martirena, a top-producing agent with Compass in the highly competitive South Florida market, projects modest appreciation of 1 to 2% nationally for the 2026 housing market. This represents a stark contrast to the unsustainable double-digit gains witnessed in 2020 to 2022, but it's unequivocally not a freefall. Further corroborating this outlook is Realtor.com's comprehensive 2026 housing forecast, published on December 2, 2025, by their expert team, including chief economist Danielle Hale. After years of sustained high interest rates and peak home values squeezing buyer affordability, the reinforced consensus articulated by economist Irina Martinsevic on March 11, 2026, is a fundamentally stabilized market. So, while we're not heading back to the bidding war frenzy of a few years ago, when properties averaged just 7 days on market, we're also not looking at a repeat of 2008. The underlying economic mechanics and lending standards are simply different this time. Instead, all signs point to something far more predictable, which brings us to mortgage rates on the move. Relief for buyers? Crucial reset. And part of that reset, a huge part of it, is what's happening with mortgage rates. Now, after what felt like an eternity of rising rates, we're finally seeing some meaningful movement. Bankrate senior industry analyst Ted Rossman has been pretty vocal, expecting the average 30-year fixed mortgage rate to fall below 6% for the first time since summer 2022. That's a significant shift, especially considering we saw rates recently peak above 7.79% in October 2025. This easing offers the first meaningful relief to buyers, as an article from the National Association of Realtors on May 12, 2026, rightly pointed out. It's not a full reversal, but it's real and impactful. James Harris, CEO of the Aaron & Partners Real Estate Group, in his 2026 market predictions, actually forecasts rates will hover in a more predictable 5.8% to 6.3% range, suggesting less of the wild swings we've endured. For example, if you were looking at a $400,000 home in a competitive market like Tampa or Austin, with rates at 7.2%, your principal and interest payment would be roughly $2,720. Drop that to 5.99%, and suddenly you're looking at about $2,398. That's over $320 back in your pocket every single month, or nearly $3,840 annually. That's not insignificant, especially when affordability, driven by these high rates, has been the central theme of the 2026 spring market. We're expecting the February 2026 mortgage data, which Intercontinental Exchange Incorporated, IC, released on March 25, 2026, to further confirm these performance trends, showing a 15% uptick in loan applications compared to January. So, while price escalations from the pandemic are largely in the rearview mirror, this rate relief is creating an entirely new landscape, one where the old data game is being fundamentally reshaped for the better. And this is where the real data gold rush starts. Brokerages, tired of being mere conduits for Zillow or Redfin, are aggressively pursuing what industry veterans are calling data sovereignty. Remember Saul Klein, the San Diego MLS CEO? He used to say that before online listings, a listing was a marketing opportunity, not just a data point. Well, that opportunity is coming back. Take Adam, for example. They're a key player providing detailed property and neighborhood data solutions, empowering brokerages to generate leads and truly differentiate themselves. We're talking about exclusive data on a brokerage's own website, not just aggregated public records. It's about building direct client relationships, not feeding the third-party portal beast. Think about it. Instead of a buyer searching on a national site and then being handed off, they're starting and ending their journey with the local brokerage because that brokerage offers superior, granular data that the big guys simply don't. Stuart White, president and CEO of RealTrax, a major Tennessee-based MLS, announced a significant shift in April 2026. They replaced their traditional MLS participation agreement with a new brokerage services agreement, explicitly stating that the listing broker owns the listing content and its associated data. This clarifies a gray area that's been evolving for years. This isn't just about control, it's about competitive advantage. By leveraging this proprietary data, local brokerages can create hyper-specific, value-added tools that national portals simply can't replicate across thousands of diverse markets. This strategic data reclamation empowers brokerages to control their narrative and client experience, rather than just being a conduit for aggregated listings. This is how they build trust and loyalty in a market that's otherwise feeling the friction of shifting dynamics. For example, is leveraging its vast property and neighborhood data, encompassing everything from historical sales figures to localized school district ratings and even granular noise pollution scores, to help brokerages not just list homes, but generate highly qualified leads and powerfully differentiate themselves with exclusive, hypergranular data directly integrated into their own websites. This isn't merely about distributing listings. It's fundamentally about owning the narrative, owning the deep, actionable insights that buyers crave. And this transformative shift is already playing out vividly in specific local markets across the nation. While Fifth Row Analytics, in their comprehensive April 13, 2026 report on U.S. real estate market trends, notes a national crossroads of stabilization and transformation, some metropolitan and even secondary markets are demonstrating remarkable velocity. Take Battle Creek, Michigan, a prime example. As of November 7, 2025, homes in specific Battle Creek zip codes like 49015 were selling in a blistering 28 days on average. That's a stark improvement from 42 days a year prior, and it significantly outpaces both Michigan's median of 56 days and the national median of 77 days reported by NAR. We saw 30 homes absorbed in Battle Creek in that week alone, up from 27 year-over-year. This isn't a fluke. It's a tangible result of demand meeting a more disciplined, data-driven market. It's exactly what James Harris, that seasoned real estate veteran from the agency, meant when he said 2026 will reward discipline over luck. While national data like Realtor.com's December 2, 2025 forecast from Danielle Hale and her economic team still predicts modest national appreciation around 1.7%, specific pockets like Battle Creek are showing us that local dynamics can absolutely defy those broader averages, creating critical windows of opportunity for quick, informed action. This hyperlocal performance underscores precisely why data control and proprietary insights will define the future of successful listings. So, why is this data control such a game changer? Well, it's not just about marketing, as Rob Hahn noted in his response to the Battle for Listings article. It's fundamentally about data. Brokerages reclaiming their data means direct, unfettered control over listing information, valuation tools, and crucially, client insights. They're no longer just feeding the beast of aggregated platforms. They're building their own. This move enables them to offer proprietary tools and hyperlocal insights that Zillow or Redfin simply can't match. Consider Adam's model, for instance. By integrating granular property and neighborhood data directly into a brokerage's own website, they're not just providing a list of homes. They're enabling a personalized experience, complete with historical sales figures, localized school district ratings, and even noise pollution scores. This isn't just a convenience. It's a competitive moat. It fosters deeper client loyalty by reducing leakage to other sites and positions the brokerage as the definitive, trusted source for local real estate intelligence. Mike Martirena of the Ivan and Mike team at Compass in South Florida, speaking in Forbes on December 22, 2025, predicted a stabilizing market in 2026, with modest appreciation of 1 to 2% nationally. In such a market, the battleground isn't just price. It's unique, detailed data. James Harris, with his 25 years of experience, summarized it perfectly, stating that while 2025 wasn't a crash, it was a reset. 2026 will reward discipline over luck. Brokerages with robust data strategies are precisely those disciplined players poised to outmaneuver those relying on outdated models, securing a stronger position as the market continues its stabilization. This ability to offer unique, detailed property and neighborhood data isn't just a marketing advantage. It's the new standard for attracting and retaining both agents and clients, fundamentally redefining what it means to be a modern brokerage. So what does all this mean for the housing market in 2026? It means we're entering a phase where the digital battlefield of real estate is shifting from centralized aggregators back to the local brokerage. This isn't just a technical upgrade. It's a fundamental reassertion of control over the most valuable asset in the modern real estate transaction. Proprietary data. James Harris, from his 2026 real estate market predictions, wasn't wrong when he said 2025 wasn't a crash. It was a reset. And 2026, by all accounts, is going to reward discipline over luck, especially discipline in data ownership and utilization. This trend will inevitably lead to more precise, localized market insights, allowing brokerages to weather fluctuating mortgage rates, which most analysts, including those from Realtor.com and IC, predict will remain elevated, likely hovering around 6 to 7% through early 2026. This move towards data sovereignty won't just differentiate brokerages. It will define their survival, particularly in metros like Battle Creek, Michigan, where homes are already selling in 28 days, far outpacing the national median. Have you ever felt frustrated by inconsistent or outdated information on different listing sites, only to find your local agent had the real story? Drop your experiences in the comments below. And if you want to understand the underlying mechanics of real estate, hit that subscribe button. You'll get data-driven insights, not just headlines. If you found this breakdown valuable, you absolutely need to watch my deep dive into how rising insurance costs in Florida are quietly reshaping property values and investment opportunities. That's the next logical step in understanding the unseen forces impacting your local market.